Hey everyone, Les here from BG Trading. I hope you are well. Today is 16th of April 2024 and we're going to analyze the S&P ASX200 and discuss how this conflict escalation in the Middle East. We had Iran attacking Israel on a weekend, and we yet to see the retaliation and whether more countries will get involved. We could even be heading towards what could be a third world war. Who knows? But what we know is the market is currently running by fear, and that's no good for any long position. So we want to take a look on S&P ASX 200, how low it could be, it could go, and our projection for the upcoming weeks or even a month, and whether there are sectors that we could profit out of this conflict, and my expectations. So let's have a look. Before that, I would like to remind you, this is not a financial advice. It's just from BG Trading sharing with you how we apply BGS 20 strategy to chase 20 to 40% profit within 1 to 3 month time together with our VIP members. How we set up targets, how we avoid FOMO, how we use the stop loss to protect our position, especially in situations like the geopolitical conflicts or unforeseeable events that happens, and we are obligated to lock in minimal profits or even take some small losses in order to avoid huge losses. We've done many times. Now our mission here is to protect the profits we made over the last 4 months. And if you've been following us enough, if you are a VIP member, you know that we have been incredibly profitable with all those trades. We traded Resolute Mining, we traded CDC Collective, we traded Ramelius, CSO, Zip, Northern Star, Polynovo, and many other stocks, even the crypto ETF for 49% profit. They're all being done since November 2023. So now we need to protect our positions. We're gonna use BGS 20 strategy exactly the same way we buy stocks to protect. In fact, we have been reducing and even closing positions that we bought and that we consider extremely high risk assets, and we are focusing to value stocks. We're holding some value stocks, but even though we still believe that anything can go down at the moment if panic starts to emerge further. First thing we want to look at into the S&P ASX 200 is this huge red candle here. We had sort of a ascending consolidation right there, and then if we look into the RSI, we can see this sort of a bearish, which is completely negative for what we are looking for. So if we look at this, we have multiple higher, lower highs. We have multiple lower highs, and those lower highs obviously suggest that we would have a breakout here, and exactly what's happening. So this hypothetical support level that we had around 7,600 has been tested today. But the problem is, if tonight or tomorrow night, for example, US market crashes again, it's most likely we're going to see another huge red candle here, and that this market correction could become even a mini market crash. So what I see here is that the market is still trading at FOMO levels for the long-term trend, and that is always dangerous, especially in time that the market is controlled by fear. So the sentiment is fear. So we need to make sure if we're going to buy back again, we gotta wait for the market market to correct, and it very likely we can see the market come to 7,300 and easily if things continue to escalate. So really careful. We don't want to lose our profits made over the last 4 months. So minimum positions. Now the question is, should I short the market via BBOs? So we haven't done that this time. We've done many times. We haven't done this time. And the reason we haven't done this time, because ideally I would like to wait for a pull up again. If the market goes up again, close to its all-time high, or if I see a lower high again, then that's the time I wanted to be shorting the market, for the reason that I don't want to buy now, because we probably, if we go to BBOs now, two reasons we don't want to buy now on the BBOs. First of all, because we have been already very profitable over the last 4 months, so we don't have to chase everything. But if you look at, we are already about 10% from the bottom, which means the top of the market. So we kind of midway of the range I would be chasing with BBOs. Essentially, I would say I missed the boat here, although this is a very constructive formation. Very constructive formation. I would like to see a pullback on the BBOs, which means the index moving up again. If US market goes up again, I won't buy anything. I just wait to see if ASX goes up, then I'll buy BBOs or even short the US market. In combination to this, in combination to the fact that we have this Middle East conflict, we also have the fact that market could be pricing even interest rates hike again. So all this rally that we had on S&P, ASX200, NASDAQ, all the tech stocks rally was based on multiple interest rates cuts. However, inflation is still a lot higher than, and ideally Fed would like to. And therefore, we could see a potential, a major correction, especially in the tech and growth stocks. We can see the signs now. If we open up ZIP, for example, is down 11%. Remember, I've been talking about ZIP on our Facebook communities. Yeah, we locked our profit a little while ago when ZIP was trading about $1.10. It's still higher than the profit that we locked. However, as you see, a lot of people ask you should buy more even if the results are positive. We got trapped in a positive result recently with Centire Limited, which the stock started falling, and obviously in combination to this huge correction on the stock market as a result of Middle East conflict. But ZIP could happen exactly the same. The result was positive, but then the stock has been shorted now. Everyone is selling. And if you using BGS 20 strategy, for example, on ZIP, you will see that the stock's now back into a buying area, like technically fair price for the short term. But what worries me is this huge distance in between the long-term moving average and the short-term moving average, and that's when people get trapped, even buying a so-called technically discounted price for the short term. What ideally you wanted to see is these candles going very close to, as close as possible to the SMA 250, which is the long-term moving average. To do so, we would have to see ZIP around 57 cents. The question is, would ZIP come back to 57 cents? It could if the market start pricing interest rates hike. We could see ZIP back into 57 cents very easily. When is going to happen? I don't know. I'm actually think that we most likely to see 80 cents and then potentially a bounce. But I don't know how much will the market price. We see across all the high risk assets, companies that do not generate profit, they are all getting smashed. If you look, for example, Appen is another growth stock. Obviously, ZIP is a better quality because ZIP has been growing. Its fundamentals it's improving. Its business model, where Appen is still losing revenue, when although they have been streamlining its operation in order to save a lot of cost. Anyway, the point I want to say is that it's down 10% as well. They're all getting smashed. Where lower risk assets, if you look, for example, BHP, it's not getting smashed. It's just falling a little bit. If you look at Northern Star, which is one of the leading gold mines, only pretty much flat. So, especially gold prices going up. So there's a lot of sectors that we could be still holding, and that's what we're doing. We're holding still gold positions, although we sold Resolute Mining we sold Resolute Mining last Friday. Even in the same sector, you go and look into higher risk assets, like Resolute Mining is a higher risk because the all-in sustainable cost is way higher than the other leading producers, and especially with mining in Africa. We see this huge red candle here, which I don't like it a lot. Lucky we had a target of 49.5 cents, and we sold that 4 days ago, which was on Friday, and together with some of our VP members, $23,000 profit, 46% profit. And that's how we play here. We buy and we sell, we lock in profit and move on. Doesn't matter what happens. So in this case, we don't have to profit out of this correction or crash, but what we can do is we get ready, because cash is a position as well. Remember, cash is a position. If you're holding cash, nothing wrong to hold cash. Is actually very positive why the market's falling. So cash is a position. So when we see most of these guys here, for example, even if RSG, for example, comes under like 38 cents, which is a technically discounted price, we're probably gonna buy it again. And many of the stocks that we've been buying and selling using BGS20 strategy for 20 to 40% profits. That's how we do here. But at the moment, I would just be minimal exposure in the market. That's what we're doing. Minimal exposure in the market. We locked in some of our profitable positions. We even locked in BHP today at the 6% profit. That's it. Wasn't we had the target of $50, but because this Middle East conflict could escalate, we don't want to be holding any of those stocks that could fall. So we locked profit. We're still holding some of the other stocks. I'm not going to mention which one it is, but what we want to do is we really want to buy back all those stocks when they come back at technically discounted price. And as a dramatic and panic these situations, this conflict generates, we are looking forward to see our very same stocks coming back to technically discounted price in within 1, 2, 3 weeks or a month, and then we buy them all back for the next rally. That's how we do here at BG Trading. Guys, hope that was valuable. At the moment, again, I think that we will see further downside. Even if we see upside here, would not be attempt to go nuts into buying a lot of positions until this Middle East conflict is fully digested by the market, and even if we see, until we see the S&P ASX200 potentially a major correction, if that happens, potentially under 7,300, I will be a lot more comfortable buying there, buying stocks when the index is trading at technically discounted price once again. And I'm very confident that sooner or later that's going to happen. Because if you look at the historic data, you can see stock goes, the index goes up, and then always test. Sooner or later, they will test the SMA 250, and we should see a test very, very soon if this situation escalates. Hope that was valuable, and I hope to see you in the next video. Bye.